The Hershey Company, stock ticker HSW, now trading at $195.57 per share, means year to date they are now down 13.82%, and over the past 6 months, down nearly 25%. They were trading as high earlier this year as around $276 a share, but have now traded as low as $190 per share, which means they are very close to that 52-week low. Now, trading at this price range does give them a higher than normal starting dividend yield for them, sitting at around 2.44%. So in this video, we're going to be taking a deep dive into Hershey stock and seeing if it's currently trading at a good value by jumping into my stock valuation spreadsheet. Now, before we do that, there are a couple of different things that I want to look at. Let's go ahead and jump into some of these dividend metrics. And the first thing I like to look at is typically going to be the dividend history. We'll go ahead and zoom out, and you can see they've done a pretty good job of increasing those dividend payouts every single year. It looks like they pay quarterly, and in 2013, they were paying out around 42 cents per share. And jump forward to now, you can see they recently had a dividend hike, and they're now paying out around $1.19 per share. So they have seen pretty solid dividend growth over that time. Let's go ahead and look at those dividend growth rates. If we scroll down, we can see the 3-year dividend growth rate sitting at around 11.25%, the 5-year close to 10%, and the 10-year sitting at 9.44%. So that's pretty solid dividend growth rates over that time period. Now, obviously, all these dividend metrics mean nothing if the dividend isn't safe, so we always have to look at that dividend safety, and we can see the payout ratios showing at around 50%, but the most important payout ratio, in my opinion, is going to be the cash flow payout ratio, because dividends are paid out of free cash flow, and we can see that is currently sitting at around 34.14%, which to me is a very, very healthy range. That's pretty much exactly where I'd want to see it for this company, so that's definitely a good sign. Now, something else I want to take a little bit of a dive to is the financial statements for Hershey's. Specifically, I want to look at the income statement. We're going to take some time to glance at this, and we can see at the top line right here we have our revenues. Now in 2013 they saw revenues of around 7.1 billion. Jump forward to December of 2022, it's up to 10.4 billion. So they did see some decent growth during this time period. But here's what I think is interesting. If we scroll down even more and we look for net income right here, you can see net income in 2013 was 820 million, but jump forward to now, it's now 1.6 billion. So while we did see decent revenue growth, the net income growth was much better, basically doubling over that time period. And that basically means that the margins for Hershey's over that time period got quite a bit better, which is obviously something we're really going to want to see for a larger company. Keep in mind they have a market cap sitting at around 40 billion. So that's a little bit of the history on Hershey's, but we still need to answer the question of, are they trading at a good value? So let's go ahead and jump into my stock valuation spreadsheet, where we'll look at a few different valuation models. Like always, if you'd like to be able to download this spreadsheet and join a community of dividend investors, then you can head over to my Patreon page at the link in the description. Let's go ahead and come up here and plug in HSY and hit enter, and you can see all of this data will automatically load in, and you can see the pretty drastic drop off in the share price over the past few months. Now, we already touched on the dividend metrics quite a bit, but we can see the 20, 50, and 200-day moving averages all down by quite a bit. Now, analysts currently have a target price of around $264 per share, so quite a bit higher than that current trading price. Institutional ownership around 58 to 59%, and a beta of just 0.31. So you should see very, very little volatility with this company. Now, the first valuation that I typically look at is Graham's valuation, but I really don't think it provides a fair valuation in this scenario, so we're actually going to skip it and go straight to our discounted cash flow analysis. Now, the idea behind a discounted cash flow analysis is we should be able to value a company based on how much free cash flow they're going to produce in the future. So basically what we need to do is project a growth rate for those future free cash flows. So to do that, I plug in the company's historical free cash flows here, and we can see they've done a really good job over the past few years of increasing their free cash flow. Now, when you also take into consideration macroeconomic environments and also analyst predictions, I'm going with a growth rate of around 7.5% for the future free cash flows of the company. I then found the present value of those future free cash flows and added them together, add the company's cash and cash equivalents, and subtracted out the total debt to get their equity value divided by shares outstanding, and I came to a discounted cash flow price per share of right at $250 per share. Now, the next valuation we'll be looking at is the multiples valuation, and this is a valuation model where we basically take companies that are similar in structure, we take their stock price divided by earnings per share to find their price to earnings multiple. So we're basically seeing how the market is valuing these comparable companies. We take their average price to earnings multiple, multiply it by Hershey's earnings per share, and we come to an intrinsic value of around $158 per share. So that's actually a pretty radical difference from the discounted cash flow analysis that we just saw. Now, the last valuation we'll look at is the dividend discount model. This values a company based on how much they pay out in dividends and how much those dividends are increasing over time. So I plugged in the company's quarterly dividend payouts so we can see how much they pay out each year, and now we can see our year-over-year dividend growth rates of 4%, 12%, 15%, and 15% again. So really solid dividend growth rates over the past few years. Gives them an average growth rate of around 11.5. Moving forward, I'm projecting a dividend growth rate of 6%, discount rate of 8.5%, and that gives them a dividend discount model price per share of $202.16, which is actually pretty close to that current trading price. So if we go ahead and jump over to our output tab, we can see the three valuations that we use. We have DCF at around $249.60, multiples at 158, and dividend discount model right at $202 per share. So when we average all three of these together, we come to an intrinsic value of $203.35. Now, the current trading price is currently sitting at around $195.32, which is pretty close to the intrinsic value we came to, but with a 10% margin of safety, you could see our acceptable buy price for this company sitting at around $183.01, and with a 20% margin of safety, the acceptable buy price sitting at around $162.68. So personally, in my opinion, although we have seen this company's share price come down by quite a bit year to date, it does look like they are still trading fairly close to fair value. I think long-term Hershey's definitely still has the ability to be a solid dividend growth stock, but I don't necessarily think it's trading at a bargain value as of this price. So as for me, Hershey's is on my watch list, but I definitely don't plan on adding it as of right now. Go ahead and let me know your thoughts on this company in the comments down below, and keep in mind, if you'd like to be able to download this spreadsheet and join a community of dividend investors, then you can head over to my Patreon page at the link in the description. So with that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.